Today, we started to see a little bit of weakness show up in the stock market. However, was it because of what the Fed had to say today? The Fear and Greed Index sitting at 69, well within greedy territory. And like a wise man once said, be fearful when others are greedy, be greedy when others are fearful. We look at how the indices fared across the board. The Dow was down 352 points. The Nasdaq was down 17 points. S&P 500 down 17 points. Russell 2000 down 4.33. However, when we look at advancing issues versus declining, we had 75.1% of issues declining on the day. Overwhelmingly, we had more stocks on the sell side than we did on the buy side. Then we come over and look at how the sectors performed across the board. Communication services leading the way, up 0.51. However, basic material, utilities, healthcare, real estate, consumer cyclicals, industrials, energy, and financials all in the red today. If we come over and look at XLF, we see XLF pulling back a bit today, not enough to come back and start filling the gap. We look at KRE, not able to come back and fill the gap either, kind of having an inside day. Then we look at JP Morgan, basically just consolidating up here at these higher prices. Then Goldman Sachs almost making it down, filling the gap. Now, speaking of filling gaps, Tesla, we talked about this and I asked the question yesterday, was Tesla short? Yesterday on stream, we talked about how I plan to play the short in Tesla. Today, I went ahead and covered that position. Now, Tesla did not make it all the way down there today, essentially closing the gap. We got close, however, not close enough to be considered a gap fill. Then we look at this article right here, NVIDIA stock rise, how a transitional quarter could be a problem. When we look at NVIDIA stock, we can see we're basically consolidating up here near all-time highs. Let's not forget, NVIDIA has earnings coming out on November 20th, and we're going to see, will those earnings go ahead and propel NVIDIA higher, or are we going to see NVIDIA finally starting to head back here just a bit? We come over and take a look at Meta. Meta today was down 18 cents. We have a selling tail on top of the candle, a little bit of a buying tail on the bottom. However, we look at this article right here. Activist Investors Value Act has 1 billion stake in Meta, sources say. And we're going to see, will the activist investor help propel Meta to new all-time highs, or is it going to be a little disruption and we're going to see Meta starting to fall off the cliff here just a bit? We look over here at the dollar index. We see the dollar index having another strong day out there, up 39 cents on the session. And if you look left, we've come all the way back up here, basically testing out this swing point. So do we start to get a pullback from this area? Because as we look at gold, gold continues to drift on lower, and we're not really seeing any recovery on the way back up. Now, we've been talking about this area in gold right down here near this high volume area, which comes in somewhere around 2,545 or so. MACD indicator on the daily chart still looks extremely bearish at this moment. We look at crude oil. This could be the opposite of a hanging man type of candle. You see, we have this little corrective move right here. Then we get a hammer basically flipped upside down, showing that buyers were able to step in at some point during the day. However, towards the end of the close, they slammed it right back down. Now, this could be part of a bottoming formation where we see crude oil start to rise. We look left, we're coming right up towards the swing point as well. So it kind of makes sense. MACD indicator, however, not really giving us a big heads up. Now we come over and look at earnings. Today, Shopify had earnings come out before the bell, and Shopify was expected to move plus or minus 12% on the day. Now we actually come over and take a look at Shopify stock. It closes up 21%. However, it did not close at the high of the range, actually closed probably close to the lower third of the range or so. We look out here on the 30-minute chart, you can see it starting to roll over. And is it about to come back and potentially test gap support? Now, tomorrow is going to be very, very critical. And we're going to talk about why. Because today, Kashkari says, only inflation could derail a December rate cut. And if we come over and we look at what we have on deck for tomorrow at 8:30 a.m., we have CPI data coming out. We have a lot of FOMC members that are going to be yapping throughout the day. Then on Thursday, we have the PPI coming out as well. Now, something we talked about today during the live stream was the fact that normally CPI will move the market one way, PPI will push the market back the other way. So we're going to see, does CPI push the market lower, or does it go ahead and rally stocks up higher? Let me know your thoughts in the comment section down below. And if you guys don't want to miss the next time I go live, make sure you're subscribed and the bell notifications turned on for all. Now, if we come over and look at the Dow, today, Dow basically confirming that weak candle, that shooting star candle yesterday, Dow able to come back and essentially fill the gap. However, let's not forget, we still have gap support down here from the election rally. We come over and look at the Russell 2000 real quick. What do we see? Russell 2000 not having a good day out there, down 1.75%. However, when we look left, we were able to come right back over here, filling the gap. Now the question is, are we going to come down towards gap support, or do we firm up from here? And I think tomorrow, the CPI data is really going to hold the clues to all of that. Now I want to bring it to your guys' attention. There is no published 80% sale with Apex Trader Funding at this moment, but if you use the link in the description box down below and use promo code Mike at checkout, I've been told that 80% discount is still being applied. Now, as we come over and look at the QQQs real quick, we can see we have double a hanging man candle right up here near all-time highs. MACD indicator is still crossed to the upside. However, let's not forget, we have a gap not too far below us at about 505.69. Then as we dive down and we start looking, let's say the 1 hour chart, you can see we're basically consolidating up here near these levels. And this morning, we talked about this on the live stream. We have this upper level consolidation. If the MACD indicator gets towards the zero line, which if you look, that's essentially where we're at right now. This could be nothing more than a recharge point, getting ready to take another leg higher. Will we go ahead and rock it to new all-time highs? Now, if we go ahead and we look, notice this gap right over here could still come back and get filled. And will it be the CPI data or even the PPI data that gets stocks pushing a little bit lower? And even if we come down and fill that gap, that really does nothing to really affect this uptrend that we are currently in. The 38% retracement is well below that first gap potentially coming over here and getting filled. Now, when we come over and look at the futures markets real quick, you can see on the 4 hour chart, we talked about today on the live stream that if we could break below this consolidation area, we're likely going to test this area and start to work in this, very poor market structure area within the last week's volume profile. And that's what we did today. We came down there, boom, we rocketed right back out of there. And we can see the 38% retracement is substantially lower from the current prices. We look out here and take a look at the 30-minute volume profiles. Now look at the shape. Today is going to be a P as in Paul shape profile. Now a P-shaped profile isn't necessarily bullish or bearish, but what it says is if we start trading below value area low, we're likely going to explore the lower third of the range. And one of the areas I'm looking at is going to be this minus development area right down here. And that's going to come in somewhere in the ballpark of about 21,092 up here to about 21,097. Now, when we look at the value areas, value area low is really going to be about 21,174.75, with the point of control being slightly above it at 21,185.25. Value area high is going to be up here at 21,235.75. Now, today, we were talking about this minus development area from the prior day. We came into it once, we came into it twice, and I'm really shocked that on the third time, we did not try to push up and out. If we get back up into this area again, we are likely going to go ahead and push through this area and start trying to probably trade back into this distribution area within the profile. Then we'll see, can we make it right up here towards this minus development area, which I'll drop a horizontal line right now at about 21,323.75. Keep in mind, we do have the potential catalyst tomorrow that could send the NASDAQ all the way up towards that price point. Now, when we come over and look at the SPY real quick, what do we see? Well, double hanging man type of candles. The wick on the bottom means sellers attempted to push us lower. However, buyers stepped in, was able to push the market back. However, we do have gaps below us at some point. We'll come back and get filled. On the 1 hour chart, you can see the MACD indicator basically bearish cross of the two lines, working down towards the zero line. But on the 30-minute chart, we are already down towards the zero line. And notice today, now we have the value areas of the profile essentially shifting lower. And what I mean by this, look at value area high compared to value area high from the prior day. Shifted lower. The point of controls also shifted lower, along with value area lows shifting lower as well. And the range also expanded today. So now the question is, do we firm up from this area, or are we going to start setting another ABC pattern down? Now I want to go ahead and draw this out. If we measure A to B equals C to D, that's going to give us a price completion down here right about 593.38. That will bring us right near gap support. If we push a little bit further, maybe we'll come all the way down and potentially fill that gap. As we jump over and we take a look at the futures markets real quick, what do we see on the 4 hour chart? We're starting to get that roll effect. And we talked about this morning, two different targets. One coming back into the minus development area here. And if we could flush through it, since we were in it once, twice, I said a third time, we'll probably flush through it. Then we'll probably hit that point of control at 59.95.00. And you know what? We overshot that point of control. We were able to regain it and come screaming on the way back up. Now, as we come over and start looking at the volume profiles off the 30-minute chart, notice we're closing within value, which value area low will be 6,008.00. The point of control will be 6,024.00. value area high is going to be 6,027.00. Now, as I'm looking at this, one of the targets I will want to focus on tonight, assuming we are trading above value area low, is going to be this minus development area, which really comes in somewhere in the ballpark of 6,020.50. We breach that, then I'll target the point of control, then I'll target value area high. But remember, with the volume profile rotation, if we break value area high, then we start coming back down. I want to target the point of control. I want to target value area low, and we could even look to target this node if we're playing the rotation back down, which really comes in somewhere in the ballpark of 6,015.50. Now, if you'd like to see how I lost $2 million trading the futures markets in 2 days, watch this video right here.